Okay, well hello everyone and thanks for joining me today. I'm James Harte and welcome to this Orbex Trader Education session. Now, in today's session, we are going to look at an extremely popular technical indicator that I'm sure many of you have heard about. Perhaps you've even had a go at trading with it, and that is of course the Ichimoku Cloud. Now, what is quite interesting about this indicator is that from a lot of the new traders that I've worked with, there's always a great level of intrigue surrounding the indicator, maybe just because it has a cool name. However, most traders are actually put off when they see the indicator on their charts because it appears very complicated and there's quite a lot going on. Now, the good news is that, as with the majority of technical indicators, the Ichimoku Cloud is actually very simple to use, and once you have a clear understanding of the different elements involved and what they mean and how to use them, then you should be able to quickly build the Ichimoku Cloud into your analysis and trading. So that's what we're going to talk about in today's session. We're going to discuss what the Ichimoku Cloud actually is, what it does, and how you can use it. As ever, if you have any questions during the session, please just write them in the question box and I'll stop periodically to answer them as we go along. Okay, so first of all then, what is the Ichimoku Cloud? So the Ichimoku Cloud, or Ichimoku Kinko Hyo, is an indicator system that was developed in Japan in the last century, and the term itself translates into one-look equilibrium chart, as the indicator is intended to help traders quickly establish market sentiment through the use of just this one indicator. Okay, so the idea is to provide traders with everything they need to assess the markets using just this one indicator system. So how is it that the indicator does this? Well, the indicator is made up of 4 parts. So we first of all have the Tenkan Sen line, which is the conversion line. And this is set to a default 9 period, and it will be shown on my chart shortly in red. And this gives you the middle of the 9 period high and low. We then have the Kijun Sen line, which is the baseline, and that will be shown on the charts in blue. And this is set to a default 26 period, giving you the middle of the 26 period high and low. We then have the Chiku span line, which is the lagging span line. This will be shown in lime green. And then finally, we have the cloud, which will be shown in both orange and pink. So orange for bullish and pink for bearish. So this is made up of the faster Senkau A line, which is the middle between conversion and the baseline, and then the slower Senkau B line. This is the middle between the 52 period high and low. So if all of that sounds very confusing and a little bit daunting, don't worry, because we're going to pull up an image in a minute and talk you through very clearly what the Ichimoku indicator is all about. So what do these various elements help us to do? Well, essentially what the Ichimoku Cloud is extremely useful at is helping us identify trend direction in the market, as well as identify areas of support and resistance. So it's an incredibly useful indicator. As I said, there's a lot going on, but it's very simple and straightforward to use once you understand it. So what we're going to do now is walk through the various elements involved with the indicator. Now, it's worth pointing out at this stage that this is a very old indicator and it's being used by thousands of traders, and there is a wide range of strategies that can be employed using the indicator and the various elements involved in the indicator. But as always, what we're trying to do in these sessions is, instead of just giving you quite a superficial overview of the different trading methods, we're going to focus on a couple of solid trading methods that you can really get to grips with during the course of this session, and then take them away and start applying them to the markets. So the first and most important part of trading the Ichimoku system is the cloud, Kumo. So as you can see here on the chart, the cloud shown in pink and orange, okay? So this shaded area on the chart is the cloud. So the first thing to note is that when price is below the cloud, as we can see here, this is classed as bearish. and then when price is above the cloud, as we can see here, this is classed as bullish. Now furthermore, when the cloud has turned pink and price is below the cloud, then this shows that the trend is strongly bearish. And when price is above the cloud and the cloud has turned orange, this shows that the trend is strongly bullish. So looking at this image then, you can see clearly that we have two distinct market phases. We first of all have our strong bearish trend here with price moving along in that lower trajectory whilst the cloud has turned pink. And then on the right here you can see that we have a nice bullish phase where we've had quite an explosive advance higher and the cloud has turned orange. So for now, ignoring the other elements of the chart, ignoring the other elements of the Ichimoku indicator and focusing simply on the cloud is a really quick way of gauging trend direction and trend strength. Okay, so whenever we open a chart, we can look to see where price is in relation to the cloud to give us a really quick read on one, whether we have a trend in the market, and two, whether that trend is developed, so whether that trend is strong. Okay, so once we have identified trend direction, so looking at this point in time here where price is selling off, okay, so we know that price is moving in a bearish trend, price is moving below the cloud has turned pink, which we know has confirmed that the trend is strong. So at this point in time, we want to look to only be taking bearish setups, okay? Now we've talked a lot in previous sessions, and hopefully most of you know this, that it is possible to make the most money in the long run in trading by always looking to follow the trend. So we always want to be looking to trade with the trend, and the Ichimoku Cloud is a fantastic tool for helping us do just that. Now, in terms of actually trading with the cloud, the first option we have is to simply use the cloud as a directional tool to help us identify the direction that we want to be trading in, and then we can rely on our own trading methods. So for example, if you are a breakout trader, once you identify a bearish trend like this, you would be looking to sell as price breaks down through support lows. So looking at this chart, you can see that after price had crossed over initially to the downside and price is moving below the cloud, we know that we're in this bearish trend scenario, then what we want to look for are areas of support which we can look to target as price breaks through. So you can see here that after we cross over initially, we put in this low, we trade back up, we form a lower high within this trend scenario, we then sell off, okay? And as price breaks down through that support low, this would be our initial breakout trade to the short side, okay? So we're using the cloud to identify our directional bias, and then we're using our own breakout method to simply trade in the direction of the trend. And you can see that this is a method which we could continually apply during this bearish period. So after we get the sharp decline here, you can see that price puts in a really solid support level here. We get 3 really good touches at this level, and then once again you can see that price rolls over and breaks down through those lows. So again here we'd be looking to put sell orders below this support level, okay? Whilst price remains below the cloud, our bias is still to the downside, so we're happy to continue to take short positions. So we're using the cloud for that directional bias and then relying on our own entry method. So again, we break down through these support lows, we'd have our stops above the recent high, so using that typical structure-based stop, if we're entering on a break of support, we have our stop above the most recent resistance point in the market. So price breaks down, we form a new low, we then retrace back up again, and then once again you can see that as price rolls over and we break down below that support level, we'd be looking to enter to the short side again. So once we break that low and we've entered another short position, you can see that price retraces back up. We come back up into the cloud. We don't break back above this recent high. So for any additional position that we'd added here, our stop would be above that recent high. So again, we haven't eclipsed that high, so we haven't ticked our stop. Price then rolls over, and once again we get another short entry here as price breaks down through that low. Okay, so this is a very simple method that we're talking about. We're simply looking to apply a classic breakout method where each time price breaks down through support lows, we're looking to enter short positions or add fractionally to existing short positions, and then simply looking to trail our stops above the recent high points, okay? So we get a final sell-off here, we get quite an aggressive decline all the way down into this big low, where after that point price retraces higher, and you can see that from this point we don't make another new low, okay? So this is the end of the trend for now. So we started up here getting short on the break of this low, price had crossed below the cloud, so we've got our bearish bias, we're looking to sell on the breakthrough lows, so we get our initial short here, we get several other great entries all the way down, but then once price bottoms out at this point and we correct higher, we don't put in a new low, so we don't have any further short trades here. And you can see that after a short period of time, price actually crosses above the cloud and starts to break out to the top side, okay? So what do we do when this happens, when price breaks out above the cloud? Well, all we do is simply reverse our tactic, okay? So instead of looking to sell as price breaks down through support lows in line with the bearish cloud reading, this time what we're looking to do now, because price is above the cloud, and we know that when price is above the cloud, the trend is classed as bullish, we're simply looking to buy as price breaks out above resistance levels. So you can see that really in this move, the initial move that we get here is a long on this point, okay? So price breaks out above the cloud, we put in our initial high, we retrace and then break out to the top side. So that would be our initial long entry. And then after putting in a really explosive parabolic move to the top side, you can see that price stalls out at this high point here. And again, we failed to make a new high at this point, okay? So for now, this period of the bullish phase is over. So price has traded up to this high point. We've seen a retrace lower. We would be waiting to set longs on a break of this resistance level in line with the bullish cloud reading. However, price has failed to make a new high, and instead what has happened is we sold off and traded down into the cloud. So this brings us to an important point. If price below the cloud means that the trend is bearish, and if price above the cloud means that the trend is bullish, what does price inside the cloud mean? So hopefully you've guessed it, but yeah, it means that there is no trend, okay? So if price is sitting inside the cloud, this means that the market has entered a range-bound scenario. And once this happens, it means that there is no dominant momentum in the market and the trend has dried up. So we need to wait for a new trend to develop, or we need to wait for the old trend to resume. Now, one of the great things about the cloud is that we can use it in both an aggressive way or a conservative way, okay? So as we've established, once price is above the cloud, the trend is bullish. So our aggressive way to use the cloud would be to look for longs whenever price has moved above the cloud. So in this scenario here, price has moved above the cloud here, we'd be looking for long entries. However, the trend is only classed as strong once the cloud turns orange. So the more conservative way is to only look for long entries once the cloud has turned orange, confirming the trend. Similarly, the trend is classed as bearish when price is below the cloud. So you can see at the top side here, we cross down below the cloud, and from this point onwards, the trend is classed as bearish. However, you can see that during this initial period, the cloud is still orange. So it isn't until this point here when the cloud turns pink that it actually confirms the bearish trend and says that the trend is strongly bearish. So again, the aggressive way would be to look for shorts as soon as price crosses below the cloud. However, the more conservative approach is to look to only trade to the short side once the cloud has turned pink, confirming the strength of the bearish trend. Now, using the conservative approach can be especially useful in helping us avoid getting into sticky situations as the market starts to consolidate at the end of a trend and when it starts to enter a range-bound situation. So if you look at this period here in dollar yen, okay? So this period here in dollar yen, this is about a year's worth of chop. You can see that using the conservative approach, would have kept us out of trouble during this period, okay? And this is a really important point when it comes to using the cloud. So you can see, first of all, that price was above the cloud here. However, the cloud was pink. So the cloud wasn't confirming the bullish trend. So using the conservative approach, we wouldn't have been looking to set long entries. And you can see that the upside was very short-lived before price reversed and sold off. Okay. Now again here, price crosses below the cloud. However, the cloud is orange, so again there are no short entries to be taken if we're using the conservative method, because we need to wait for the cloud to confirm the trend. Okay, so we're looking to take long trades when price is above the cloud and the cloud is orange, and short trades when price is below the cloud and the cloud is pink. So you can see that during this whole period, the only time when we would really have been looking to take any sort of long trade would have been this period here when price broke above the cloud and the cloud turned orange. But aside from this very small period, we would have been kept out of the market over this whole point. So we would have avoided all of this chop, and we'd have only entered then again once price broke below the cloud and the cloud turned pink over here at this point. So you might be thinking, that's all well and good, but it means that we had hardly any trades over a whole year, okay? And that is true. However, there are a huge range of pairs and different instruments that you can trade with Orbex. And while one pair is range bound, another pair is always trending. So you simply need to identify the pairs that have suitable conditions and look to operate in those pairs, okay? So when you pull up a chart and you can see that price is chopping around like this and you aren't getting any confirmed cloud readings, then you know that you're highly likely in a range-bound scenario and you need to look elsewhere where there is a clear trend in the market. And this is a key point, because the reason that so many new traders struggle with indicators is that they try to use them all the time in all market conditions without really thinking about what the indicator is and what the conditions work best in. And what conditions it works best in, rather. Okay, so you need to understand what the indicator you're using is trying to assess about the market, what it's telling you about price, and you need to understand the conditions in which it works best and the conditions in which it is most challenged. Now, the Ichimoku Cloud is a trend following indicator, okay? So those first slides that we looked at showed it performing really well in trending scenarios, and you can see by this slide that it doesn't perform as well during range-bound conditions. However, as we just discussed, we are able to find a way of mitigating risk during these range-bound conditions and thus helping us avoid taking unnecessary losses. So using the cloud in a conservative manner is a fantastic way of modifying how we use the Ichimoku indicator to ensure that we capitalize during trending markets, during favorable conditions, and that we manage our risk during these range-bound periods where we know the indicator tends to get caught out a little more. Okay, so is everyone following that so far? I can see a few of you have joined in late. Don't worry about that. We're only just getting started, so you can pick up as we go along. Great. Okay, now the examples that we've just looked at in terms of trading breakouts through support in bearish trends and breakouts through resistance in bullish trends will hopefully show you just how simple trading with the indicator can be. Okay, breakouts in trends are a classic trading method, and when you're using the Ichimoku Cloud to help you identify the trend, you can quickly get some really great positions on, okay? We discussed the benefits of using Ichimoku in trending markets, and it really is fantastic at helping you find those great entries. But it really doesn't matter how you trade, okay? The point was to show you how you can use the cloud as a tool for gauging direction, and then simply use your own trading methods to enter trades based on the setups that you employ. So if you use market harmonics, for example, if you're a pattern trader, you can use the Ichimoku Cloud to give you a directional bias, okay? So you can pull up a chart, look at the cloud and say, right, we're either in a bullish trend or a bearish trend, and then you can look to take confluent patterns that are backed up by that directional reading. Alternatively, if you trade Fibonacci retracements, for example, okay? So if you pull up a chart and price is below the cloud and the cloud is pink, then you know that you have a bearish trend, and so you're looking to take bearish retracements. Okay, so the point is the cloud can be integrated into your own trading style. You can use your own setups, okay, so you can keep your own existing strategies, but you can use the cloud as a directional bias. Now, alternatively, if you don't really have any specific setups that you trade, then you can actually use the cloud itself to help you trade, okay? So you can see, as well as showing us trend direction, that the cloud is also showing us where the market is likely to find support and resistance. So essentially, when price is above the cloud, if it retests the cloud, then we're looking to the cloud to provide support. And then where price is below the cloud, if it retests the cloud, we're looking to the cloud to provide resistance. So let's take a look at an example of that. Okay, so you can see here that when price is moving in a bearish trend, again, we're trading below the cloud now. We know that when price is below the cloud, that the trend is bearish. We know that when the cloud is pink, that the trend is confirmed bearish, that it's strongly bearish. So when price is trading below the cloud, one particular entry method that we can employ is looking to identify periods where price retraces higher and retest the cloud, okay? And then we're simply looking for the cloud to act as resistance. So you can see that after we got that initial crossover to the top side, price retraced higher, we retested the cloud, which acted as resistance, and then we sold off, okay? And down here you can see the same thing. After we got that extended sell-off here, price once again retraced up into the cloud. This time we made it all the way to the upper level of the cloud before again the trend resumed and we sold off. And then you can see that down here we got another great entry using this resistance method. So once more price retraced off that big low, tested the cloud, and then again sold off. And you can see we actually got another minor test down here. So this is a really great entry point, and it's very similar to how we use retracements towards moving averages. So we're simply looking for price in a bearish trend to retrace up and retest the cloud to act as resistance. And then similarly, once price is broken out above the cloud, we're looking for it to act as support. So you can see over here, I haven't put the label in, but you can see here that once price is broken out above the cloud, it trades back down, retests the cloud, which acts as support, and then trades higher. So this is a really simple but effective way that we can look to capture retracement points in trends. So what you can see hopefully by now are some of the different ways that we can use the indicator in a very simple fashion to enter trending markets. And actually what we've looked at now is both a way that we can trade breakouts in a trend, so we can actually look to capture momentum and trade the trend as it expands. And we've also looked at how we can use retracements in the trend, so we can use the cloud to capture retracements in the trend and get in at a really premium entry point as we expect the trend to resume. So this is how we can use the cloud when trading with Ichimoku, and hopefully now the indicator is seeming much clearer to you, okay? I'm sure that for many of you, when you looked at the indicator, and if you've seen it on your charts before, that it appears very complicated and there is a lot going on. However, now hopefully some of this is starting to become much clearer to you and you're feeling a lot more confident about how to use it. So let's move on then and take a look at the next Ichimoku trading method. And this time we're going to look at using the Tenkan Sen and Kijun Sen lines in conjunction with the cloud. And these lines can be thought of in the same way that we would use typical moving average crossovers, okay, where we're looking for the shorter term line to cross the longer term line to the upside for a bullish signal, and the shorter term line to cross below the longer term line for a bearish signal. So we've already established that price above the cloud is bullish and that price below the cloud is bearish. So in a bearish trend, what we want to identify is a period where the Tenkan Sen line, which is the shorter term line, crosses initially above the Kijun Sen line and then crosses back down beneath it. Okay, so basically this represents a short-term correction and a short-term exhaustion of momentum, after which the trend resumes. So you can see here, looking at this example, that there are several instances during this bearish trend where we saw the Tenkan Sen line cross above the Kijun Sen line and then cross back below. Okay, so you can see here again, once price is below the cloud, that gives us our bearish directional bias, and then we're waiting simply for the red line to cross above the blue line and cross back below. So you can see we get a great entry point here at the start of the trend, and then we get several more along the way. And the important thing to point out here is that in the previous example where we were looking for price to retrace and test the cloud, we only got 3 entry points, okay? Here, using this method, however, looking for the Tenkan Sen and Kijun Sen lines to cross over, you can see that we've had far more entry points. So we got one here, we've got a further one here, we've got another one here, another one here, and then we got another one down here. So we got 4 great entry points during that trending market. So using this method then to help us trade in the trend is a really great indication of just how powerful the Ichimoku Cloud can be, because not only are we using the cloud to tell us which direction we want to trade in, but we're actually using the Tenkan Sen and Kijun Sen lines to find precise entry points in the trend. And the beauty of this method is that we're building in an extra filter of trade confirmation, okay? So this should really appeal to the more conservative traders of you. We're using the cloud to identify the trend direction, and then we're waiting for the crossing of the lines to give us our entry. So that means unless we see those lines cross and then cross back again, we don't enter the market, okay? So we've got these 2 layers of confirmation in our trade entry process here. We first of all have to identify price being above or below the cloud, and then we need to identify this crossing of the Tenkan Sen and Kijun Sen lines. And this is a really great system that can be especially useful in helping us avoid some of the losing trades that we might suffer if we're just using the cloud as support and resistance, okay? So waiting for that extra confirmation by way of the crossing of the lines can be really beneficial in helping us gain entry at the right points in the market, and also in helping us avoid entering at the wrong points in the market. Now, the only downside to this method is that we might not always get an entry, okay? Now, this is typically the case where the market moves in a very explosive manner, because of course this method relies on a correction. So once price is moving within a trend, we need to identify a small period of correction which allows the line to cross and then cross back. But hopefully, as you can see, where we do get these lines crossing, it can be a fantastic way to enter the market. And indeed, if we look over to the right hand side here, you can see that once price broke out above the cloud and we got that bullish period, well, this is a great example of a time when we don't get an entry using this method, okay? So during the bearish trend, we had a very labored, very typical bearish trend with lots of correction, lots of retracements. However, once price broke out to the top side, the move was far more volatile, okay? So we got a really explosive move, and we didn't really get enough correction to allow for the lines to cross. And indeed, the only time that the lines did cross was at this point here, and the lines rather, has as yet not crossed back again, okay? So you can see here, we broke out to the top side, the red line has stayed above the blue line. Remember, because this is the bullish example now, we're looking for the red line to cross below the blue line and then cross back to the top side. So you can see here that the red line has crossed down below the blue line. However, we haven't yet seen the red line crossing back above. So this is a really good example of where you can miss moves. And unfortunately, that is always the way, okay? There's no indicator or system that will capture every single move in the market. So what you really need to do is focus on getting the most out of the indicator you've chosen to use and out of the way that you've chosen to use it. And again, look to capitalize on those periods where the indicator is performing well. And then in other times, you can look to mitigate risk. And then unfortunately, in other times like this, you have to sit back and accept that you don't have any trades, okay? But if we think about this in terms of the time frame over which we've traded, so if we look at this whole period from November of last year through to February of this year now, okay, so we've had about 4 months there, 3 months rather. And during that period, we've had several great short entries that would have made really good profits, and then we'd simply be sitting to the sidelines at the moment during this bullish period. Ralph, yeah, don't worry, the recording will be sent out to everyone who has subscribed for the webinar, so don't worry, if you've joined late, you can access the recording, absolutely. Okay, so going back to the indicator then, another fantastic way that we can use this indicator is actually to combine the cloud with the Kijun Sen line and price, okay? So this time, what we're looking for is, for a long trade, we're looking for price above the cloud, giving us our bullish trend, and then we're looking for a period where price dips down below the Kijun Sen line and then crosses back above it. And then for a short entry, we're simply looking for price to be below the cloud, giving us our bearish trend. And then we're looking for price to pop back above the Kijun Sen line and then cross back below it. So previously we were looking for Tenkan Sen and the Kijun Sen lines to cross. This time we're looking for price itself to actually cross the Kijun Sen line to give us an entry. Okay, so here you can see that we have our examples up here. I just skipped ahead a slide, so sorry if that was a little bit confusing. Okay, so looking at this chart then, again, you can see several fantastic entry points where price is below the cloud, giving us our bearish trend, and then price crosses above the Kijun Sen line and then crosses back down below it, okay? So you can see that after we've sold off here, we cross above the Kijun Sen line, which is in blue, and then cross down below it, giving us our short entry. So this is another fantastic way that we can look to use this indicator. Now, one of the things that is really, really great about the Ichimoku Cloud is this diversity in the ways that we're able to apply the indicator, because it really does make itself attractive to so many different types of traders. We have the aggressive way of using the indicator, and then we also have more conservative ways of using the indicator. And this method of waiting for price or the Kijun Sen and Tenkan Sen lines to cross, again, really appeals to conservative traders and is a really fantastic way to look to approach the market in a more strategic manner than simply looking for a one criteria execution method, okay? So instead of looking at the chart and simply looking to identify one element that gives you the go-ahead to enter a trade, in these methods, what we're actually doing is looking to identify two methods, okay? So two elements in conjunction with each other to give us the go-ahead to enter these trades. So again, looking at price crossing the Kijun Sen line, you can see we sell off, we cross back above here, we get another crossing here, another crossing here, and another crossing down here. So again, we get 5 fantastic entry points in this market. And if we just skip back a slide, yeah, so you can see we've got 5 fantastic entry points in that market, and even more entry points here than we would get using the Tenkan Sen line crossing the Kijun Sen line. So hopefully by now you're feeling a lot more confident about using the indicator. We've looked at 3 fantastic ways that you can use the indicator, from just using the cloud as a directional guide or a support and resistance mechanism, using the Tenkan Sen lines and Kijun Sen lines, as well as using price and the Kijun Sen lines. So I'm sure that for those of you who thought this was an incredibly complicated indicator, that you're hopefully feeling a lot more comfortable about the indicator now, and probably feeling quite relieved as well, and starting to get excited about the potential ahead with using this indicator. So let's finally take a look at the remaining element of the indicator, which is of course the green line, the Chico span line, which is shown here, okay? Now, as we said before, the Chico span line is essentially a lagging line, and what the indicator does is it plots the current closing price 26 periods ago, okay? So the indicator is showing the current price as if it was 26 periods ago. So what is the point of this? It might seem a little confusing at first to have an indicator that plots the current price as if it was in the past. However, the point of this is that the indicator allows you to compare the current price with where price was 26 periods ago, okay? So it allows you to easily compare price now with price 26 periods ago. And this can be useful in helping us determine whether price has developed any momentum or trend. So looking at this blank chart then, looking at this point here, you can see that where price has moved up to this high level, where price has moved up to this high level, you can see how the Chiku span line is plotting that current price over to the left, okay? And then again to the top side here, you can see that where price has moved up to this high level, the price is actually plotted over to the left. So again, this can be a little bit confusing, but you just need to remember that where price is at currently is shown on the indicator 26 periods ago. So you can see this high here, Chiku span is showing that high over here 26 periods ago, and then this low where we are currently again is shown 26 periods ago. So one of the best uses for Chiku span is using the Chiku span line to confirm a cloud breakout, okay? So essentially we want to see Chiku span breaking through the cloud and then looking to trade in that direction. So we talked initially about how we can use the cloud to identify direction in the market. Well, we can actually use price crossing the cloud as an entry point in itself, and we can look to confirm that crossing with the Chiku span line, okay? So looking at our chart then, you can see our initial entry point to the short side would have been at this point here once the Chiku span line had crossed below the cloud. So although price had initially crossed here, you can see that the Chiku span line was still inside the cloud. So we wait to enter to the short side until the Chiku span line has actually crossed below the cloud itself. So once we've made that crossover, you can see that the Chiku span line stays below the cloud the whole way down up until this point here. We then move back inside the cloud. And again, you can see that although we get this initial breakout in price, so price starts to just pop its head above the cloud here, from that point, the Chiku span line is still within the cloud. So we don't have any bullish entry point until over here where price breaks higher and you can see the Chiku span line crosses above the cloud. Okay, so looking to use the Chiku span line again helps just to provide a little extra confirmation on these cloud breakouts. And this is a really important point about using this indicator and using all indicators, is that, as we discussed earlier, one of the big issues that many traders have with using indicators, one is in applying them to all manner of markets, okay? So looking to apply them in all conditions in the same way. We've talked about how certain indicators perform better in certain markets, and so we always need to be looking to establish favorable trading conditions to get the most out of our indicators. And then one of the other problems a lot of traders have with using these indicators is in not building in any extra confirmation, okay? So looking to simply trade the indicator based on any and all signals that they give. So this is the wrong way to use these indicators. What we really want to be thinking about at all times is looking to confirm indicator readings. Now you can either look to confirm these via other indicators or via price action reading, or in just using the elements of the indicator itself. So for example, with stochastics, where we only look to sell overbought stochastics rather, once the line has crossed above the oversold territory and then crossed back below. Okay, and it's the same with this. We're looking to trade a cloud breakout, but only once the Chiku span line has crossed the cloud and confirmed that breakout. So looking to add in this extra confirmation is a really great way of helping us avoid some of the false moves that can occur from time to time. So we've looked at a really great bunch of trading methods here, and I'm sure that if you've been paying attention closely and following along on the charts, you're now feeling really confident about both interpreting price using the Ichimoku Cloud and also in taking trades based on the Ichimoku Cloud system. So let's just quickly recap the different methods that we've looked at in this session. So we've looked at using the Kumo Cloud for directional bias, okay, where price is bullish above the cloud and bearish below, and then we go ahead and take our own setups in line with that directional reading. We've also looked at how taking a conservative approach to reading the cloud, e.g. only taking longs when the cloud is orange or taking shorts when the cloud is pink, can help us stay out of trouble in ranging markets. We've looked at how we can use the cloud as support and resistance locations when we're entering trades. Okay, so we've looked at selling the cloud as resistance during a bearish trend and buying the cloud as support during a bullish trend. We've looked at how we can combine the Tenkan Sen and Kijun Sen lines in conjunction with the cloud to enter trades. So, for example, looking for the Tenkan Sen line to cross below the Kijun Sen line and then cross back above it to enter longs when price is above the cloud, and then looking for the Tenkan Sen line to cross above the Kijun Sen line and cross back below to enter shorts when price is below the cloud. We've also looked at how we can use the relationship between the Kijun Sen line and price in conjunction with the cloud. So again, waiting for price this time to dip below the Kijun Sen line and then cross back above it to enter longs while price is above the cloud. And then also waiting for price to cross above the Kijun Sen line and then cross back below it to set shorts when price is below the cloud. And then finally, we've looked at how you can use the Chico span line to trade cloud breakouts, whereby we buy once the Chico span line has crossed above the cloud, confirming the bullish breakout, and we sell when the Chico span line crosses below the cloud, confirming the bearish breakout. So once again, I hope all of you have really enjoyed this week's webinar. Thank you for your company. And before I go, can I take any questions quickly based on everything we've covered today? Best time frame to use it, asked Vince. Vince, the great thing about the indicator again is that you can really use it on all time frames, okay? Now, as with all indicators, the lower down you go, the far more sensitive the readings will be, and some might say less reliable. So really, when I'm using the Ichimoku Cloud to read the markets, I'm typically only using it on the daily time frames. So I'll establish an Ichimoku read based on the daily time frames. Now, that's not to say that I trade based off the daily time frames. I might still enter trades on the H4 and H1 charts, but I'll be basing those trades on the daily reading of the Ichimoku Cloud. Okay, and then Tato asked, where do we get the cloud? The brilliant thing about the Ichimoku Cloud is that it's actually offered on the Orbex MT4 platform, okay? So if you go into indicators and in trend, you'll see the Ichimoku system is already set up there for you on the Orbex platform. Okay, great. Well, thanks a lot, everyone, and I look forward to catching up with you all next time. And in the meantime, best of luck with your trading. Take care.